From the news team that stands for you, this is CBS Local 2 News this morning.
With the budget battles in Washington over, at least for now, the question is, what does that mean for the stock market? Craig Ferree, as an investment advisor with NestEggg Investment Advisory in Palm Springs, he's here this morning to talk a little bit about the markets and where they go from here. Craig, thanks for joining us this morning. Great to have you.
My pleasure to be here.
Positive developments in Washington, at least for now, at least for the next few months with the budget battle resolved. Stocks are bouncing back a little bit right now. We probably shouldn't be too surprised to see what we're seeing on Wall Street right now.
Well, there's an expression on Wall Street that bull markets climb a wall of worry, and that has certainly been true the last couple of months. Plenty to worry about, but the markets have shrugged off the government shutdown, they've shrugged off the debt ceiling crisis, and stock prices have continued to move higher. Yesterday, the S&P 500 hit new all-time highs, as did the NASDAQ.
Yeah, and certainly good news when it comes to corporate earnings as well. I know Google and some other companies last week had some good numbers come out.
They did, and earnings are the underpinning for the market moving higher. Google, IBM had bad numbers, but General Electric, American Express all had great numbers yesterday. Earnings reports were a little bit mixed. This morning, Travelers reported good earnings. What you've seen in the market in the last year has been an expansion of the price-earnings multiple, which is why the market has moved higher. Two things need to happen. Either prices need to come back down to historical averages, which are about 16. Right now, the PE is at 18. The second thing that would need to happen is that earnings need to improve. So we're really focused on improving earnings at this point.
For those watching along this morning who might be relative novices, if you will, when it comes to stocks and investing, what does all that mean for the person at home?
Well, it has a lot to do with whether they are invested or not. There are three requirements to higher stock prices if they are invested, and that would be moderate economic growth, low inflation, and improving labor market. And with those, stock prices will move higher. We had a jobs report this morning. The numbers were a little bit mixed. The unemployment moved from 7.3 down to 7.2. Hard to read too much into that, but it does suggest that over the long term, we're still moving in the direction of an improving labor market. Very important.
So is now a good time to buy?
Great question, and a hard one. It depends on what your long-term objectives are. With an improving economy, improving labor market, the consumers are going to have more money to spend. If they have more money to spend, the economy improves. However, when the economy improves, interest rates go up, and the Fed, which is what a lot of people are watching, may begin to taper their bond buying program.
Tapering not happening yet. Quantitative easing continues, meaning more cash pumped into the money supply, if you will, more dollars being put into circulation, printed, however you want to put it. That drives up asset prices. Is the market artificially inflated right now?
That's a good question. When the Fed decides to taper, this period of easy money is going to end, and stock prices are going to get squeezed.
Okay, so you would say the market is a little bit inflated right now.
It is. Once again, going back to earnings. Earnings are really going to be the driver of the market going forward. Very important.
Okay, anything in closing?
If you aren't invested at this point, take a deep breath and look at your long-term objectives and start to invest. And I want to point out to people that the U.S. is not the only place to invest.
Right, opportunities overseas as well.
And I'd like to talk about that next week.
Okay, we'll look forward to that.
Okay.
Okay, great. Craig Ferree from NestEggg Investment Advisors, thanks so much for joining us. We appreciate it.
My pleasure.
Okay.
Thank you.